Let's bring in Jeff Sonnenfeld, Senior Associate Dean for Leadership Studies at the Yale School of Management. Jeff, just at face value, I would think you're applauding WeWork's efforts here to minimize shareholder value, which is your new mantra for you and the Business Roundtable. So this is actually a very positive thing going on. Why are you laughing? Is this you're giving kudos that they're keeping shareholder value as low as possible, as they possibly can, by cutting the IPO price. Kudos.
You're almost as good as Adam Newman, WeWork's founder, for changing the subject.
Newman.
But you're not as good.
Okay.
Newman, yes, I know. The same month that Mad Magazine with Alfred E. Newman went out of business.
Oh, you mentioned
mantra,
that. Yeah. What happened here? This is brutal.
Here in this case. No, I'm not going to take that segue, Joe, but what's really amazing is you said, do I applaud something? Yes, now that you mention it. I hadn't planned to mention this, but I do applaud something here. It's the honesty in this company. Honesty, yes, they've dropped the WeWork's name because We doesn't work, and at least they're admitting that now, and they've gone for the We name, and maybe they are going to become a We company. It's clearly you take a look at this model and you wonder what's wrong here on a governance level, what's wrong here on a financial level, what's wrong here on a strategic level, and what's wrong here with the character of the CEO. You could open up any one of those boxes. It doesn't make sense. Say on the financial model, $47 billion valuation. Where does that number come from? They've got maybe $12 billion of cash that was invested in them. How do they pump that up to $47 billion? Amazingly, in the S1, there's the number $47 billion. Not for what they necessarily put for their valuation. That's what they have in fixed lease payments they have to make. How convenient. What do they have in commitments in terms of tenants coming in? Only $3.4 billion. So there's a big gap there in the financial model. They're losing $120,000 a minute. That's like 25 times what Uber loses, or they're about 130 times what Blue Apron loses per minute basis, and they're losing $5,200,000 per customer. What kind of a financial model is that? A pretty promisingly weak one. On the governance issues. The inside dealing, the self-dealing of him, Adam Newman, owning 4 buildings and then leasing them back to the company, trying to, and he did eventually, and then having to rework it, buying the name We as the trademarking of the We's nonsense, the We businesses, to sell it back to his own company, pulling out almost $1 billion of this inflated valuation in his own monetization of stock pre-IPO. He apparently doesn't believe in the company himself. And in the strategic model, there is lots of competition out here. There's a company called Servcorp that's about 40 years old that's been in this space, based in Australia. They're in 34 countries, doing very well. And people talk about IWG a lot, which is far more countries, far more cities than this, which is the old Regis. There's a new startup called Notel in New York. There are a lot of people providing beanbags and Nespresso machines and have I bludgeoned you enough on this?
Hey, Jeff, my question is, what about the hubris of this company? We're not in 1999. I could understand it in 1999 that you could sort of be feeling this good about yourself and with the metrics that you're talking about. Why did they ever think it was going to fly in the current environment? I don't understand. Where was the fluff, or Uber didn't come from that IPO.
Well, why they thought they'd get away with it. We took a look at some major institutions that would underwrite them, and why those Muppets that we like to put on the show from time to time, where they're the critics, where they start out cheering something and within the 30 seconds they're booing. Is that there's a lot of euphoria. Now we're seeing this feeding frenzy, trashing the company, as they should. Where were they all before? There were journalists out there. The Wall Street Journal, our friend Andrew Ross Sorkin, New York Times, was asking questions way back, and that's terrific. But you wonder, there's a sucker born every day or every minute, as P.T. Barnum said. And who were the suckers here? The same people that fell for charismatic CEOs like Bernie Ebbers or Bernie Madoff or Jeff Skilling or Elizabeth Holmes of Theranos. The people who fall for those scams are basically all of us. I know some very sophisticated people who followed SoftBank into this deal and are really sorry they did. Their investments aren't huge. They say, oh, we learned something. I would have been happy to teach them something for a lot less than this. It's Basically, Joe, you're asking the question that the Beatles ask is, I should have known better. I think a 1964 flip side to Hard Day's Night. But I should have known better than a deal like this.
I had help. I had this thing. They used to do it that way. And to play it on my turntable, you had to put the little thing in the... remember that? You had to put in the
needle in the...
No, there was a thing on a 45 where you...
little disc that went inside.
So that it could play properly because it was 33 versus...
Different size opening from an album.
Mine just had a switch.
Do you remember Bonanza? I mean, do you...
Joe, we shouldn't admit it. Joe, didn't you have one of those ones you had to crank up with the big horn and all, the big gramophone? No.
Now you were back in your childhood again. So what's going to happen, do you think? This doesn't seem... I mean, I would come back in a year, wouldn't you? Even if I were Newman, I think I'd shelve this. No.
I think if CB Richard Ellis, CBRE, or Cushman Wakefield, or somebody eventually take this. Obviously, this is a huge embarrassment to SoftBank on top of Uber. And I don't know how suppressing the IPO somehow Masayoshi Son thinks that'll erase all the headlines about what a disaster this was, if not a scam, pumping this thing up. It's built on a form of a Ponzi scheme that's going nowhere good. It's built on just bigger and bigger growth. Making it up in the volume when you're losing on every one of these tenants doesn't seem like a very promising investment. But some of these investors who put a lot of money into this were real estate people who actually know this business, somehow suspended. There's a guy named John Bennett in the 1980s out of Philadelphia who was a huckster. He was supposedly a philanthropist. He said, if you give me X, I'll give 2X back to your charities. The people he drew in were John Whitehead, the late John Whitehead, a very good friend of mine, John Templeton, really sophisticated person, University of Pennsylvania, Yale Law School, Haverford College, Harvard Medical School, all kinds of people who should have known better that the thing was a complete scam. And he drove that up only to $500 million in that case, but it was a nonprofit, so that counts for more. Sophisticated people make dumb mistakes all the time.
Yep.
It's the old, if you're so smart, why aren't you rich? People say to me, I say, if you're so rich, why aren't you smart?
Right. Both good questions, Jeff. Thank you.